Welcome to Clatch Radio. This audio and video were created for academic, entertainment, and comedic intent only. Nothing presented should be construed as investment advice or a recommendation to buy or sell any security.
And welcome to Clatch News, concise by design, allergic to excess.
All right, let's get into it. Today's focus is Oracle Corporation. Specifically, their massive and frankly kind of terrifying pivot into AI infrastructure.
It really is a huge shift. So, okay, here's the setup. Oracle is, generally seen as the ultimate legacy tech leader.
Right, the sticky database business that runs everything behind the scenes.
Exactly. But now they are aggressively, and I mean aggressively, trying to become a major cloud and AI provider.
And they're not being quiet about it. I saw they're maneuvering to raise up to $50 billion for this.
$50 billion. The context here is just so important. This is all happening while their stock price dropped, something like 43% in the last quarter? Yeah, and that's the core tension. The whole narrative is this conflict between the economic machine of debt-fueled growth and just, the basic biological imperative of survival.
So the big question is, can an old guard company really just buy its way into the AI future with that much leverage?
That's the billion-dollar question. Well, the $50 billion question, I guess. The prevailing expectation is that Oracle's economic moat can handle it.
Their deep enterprise relationships, the high switching costs, the idea that clients just can't leave easily.
Precisely. The market is betting that moat justifies this enormous capital spend on data centers.
Okay, so let's try to balance the considerations here. What do the numbers say?
Right. So on one side, you have the strengths. And the fundamentals are, in some places, startlingly good. Their gross margins are sitting at a massive 65.4%.
Which is huge. We usually look for a 40% threshold to even identify a durable competitive advantage, a moat, right?
Exactly. They are just blowing past that. And profitability is surging. Net income is up almost 95% year over year. So operationally, they look very healthy.
And what about the technicals? I saw the RSI, the Relative Strength Index, is at 26.97.
It is. And for anyone not glued to the charts, that basically means the stock is significantly oversold. Mathematically, it looks like it's due for a bounce.
But? There's always but.
There is.
Yeah.
And on the other side, you have to consider the risks. And they are heavy. Free cash flow is negative. We're talking negative $8.51 billion.
And that's purely because of all the spending on AI chips and data centers.
It is. And then there's the leverage. It is climbing fast. The debt-to-equity ratio is now 4.40.
Which is getting up there.
It characterizes what we'd call a long-term debt peak risk. I mean, the recent sell-off isn't just random noise. It's reflecting real AI fears and some genuine skepticism about the returns on this $50 billion borrowing spree.
It brings to mind a quote from the historian Will Durant: "Tools change, incentives do not."
No, that reframes the moment perfectly.
Yeah.
The tools here, AI, they're completely new.
But the incentive?
The incentive is market dominance, status seeking. It's this invariant human historical constant that's driving this whole debt cycle. It's the same pattern you see in every industrial revolution.
So with all that on the table, what is the market take? Where do analysts land on this?
The current view can really be summarized as hold D.
Hold D, even with the stock being that oversold.
Yep. And here's why. While the PEG ratio at 0.88 suggests the growth is actually cheap, that debt load just demands extreme caution.
So you wait.
You wait. Investors should probably hold off for what Ray Dalio calls a beautiful deleveraging.
And what does that mean in simple terms?
It just means you want to see income growth clearly and consistently start to exceed the interest cost of all this new debt. You need proof that the gamble is actually paying off before you buy in.
That's the lens, not prediction perspective. This has been Clatch News, efficient, skeptical, and done on purpose. Thank you for listening to Clatch Radio.